folks, Vic here with your weekly trade example for Friday, May the 20th, 2022. I have a beauty of a trade to show you. I say a beauty because although it made a huge return, it was the trade setup that was such a beauty. It was just perfect. And although it's a short-term scalp trade, the point of this video is to show you that the logic behind this setup is the same for any type of trading, short-term or long-term. Like when you learn to read pure price action, it's transferable to any style of trading. My Coach's Corner partner and lead coach Darko, the handsome man on the left, only trades longer term, swing trading and position trading, and he has shown remarkable trading results over and over again, just trading longer term. We have lots of videos that we've posted with those trades. And in today's trade, it's the same thing. Reading price action from higher time frames for finding a low pip risk trading opportunity on our smaller time frame, our entry time frame. I really hope you like this video and mostly that you get something out of it. If so, I'd sure appreciate a thumbs up by hitting the like button. That would be great. And do be sure to subscribe to our channel. There's a subscribe button in the lower right corner of the video. Thanks so much. Here's the trade. Okay, so here is the trade, and it's on the New Zealand Japanese yen pair. Let's go through this. You know, one of the real greatest skills that you can learn is to learn to read the language of the market. Pure price action reading. You know, when Darko first joined our service and became the lead coach in November of 2017, one of the very first things he taught our members is how to read the language of the market, what he calls advanced market flow. And it is an absolute beauty. Learn this and understanding, and your trading will take on a whole new level. I'll tell you, you know, in this case, because it's a short-term trade, we're using, we call it a scalp. We use the 15-minute chart for entry, but we reference the 4-hour and the daily. We always reference higher time frames before making a trade. In this case, the advanced market flow is heading down. Now, the best way to be trading is in alignment with it. Doesn't mean you can't take counter trend trades, but your best trades are going to come when you trade in alignment with these higher time frame trends. As price starts, you know, when price breaks and goes down and comes back up, what do we want to do? We want to identify levels of potential resistance. Okay, see if I can do this right here. So when it comes up, you know, this is a potential area of resistance. When price drops below here, here's another level. Well, price just never made it back to there. And if we look at, let me get rid of that thing for a sec. If we look at this, zoom this out a bit, can you see that this was a great level of resistance? Look at this move down. That's a big, huge V-shaped reversal here. This is a place we should watch when price comes back up to it. And that's exactly where price came to. When it gets here, what do? Well, we don't just go ahead and sell. Okay, we want to see a little bit more evidence. And that's where we consult our next time frame down, which is the 4-hour chart. So we have the advanced market flow heading down on the daily chart. We go down to the 4-hour chart. Well, there's no doubt about this. This is just heading, you know, down, up and then down all the time. It just keeps doing this. So this black horizontal line is the same. That's the daily level I just showed you, the daily significant neckline or support resistance level. Now let's just see what happens when price hit it on the 4-hour chart. We hit it, we stalled, we never even established above this line. We couldn't get going. And don't forget, we're looking for the possibility of a sell. That's the trade that would be in alignment with our higher time frame trends. Then it still keeps, you know, a couple wicks down here on the 4-hour, then a little bit of a pin bar reversal here, and then this red candle. This was a really good candle to see. Why? Because it's almost, well, it's completely the body of the candle is all below this significant neckline. Not only that, when I show you the 15-minute chart, you'll see that we did some structure damage on the 15-minute chart. That means we took out these lows here, and I'll show you that, like I say, on the 15-minute chart. If we go down to that level, that 15-minute chart, so this is where all of that price was jumping around on the 4-hour chart, and finally on this run right here on the 15-minute chart, this is that same price action we saw on the 4-hour chart right here. Price came down. It was a big red candle on the 4-hour chart, remember? And we went below this low, and we went below this low. That's called structure damage. this is an absolutely perfect setup, because now what we want to do is we want to sell it as price rallies back up. We want to sell it back up at this significant neckline with a higher high stop loss, aiming to the downside. I'm using Darko's words. He says this over and over again in his pre-market analysis video, so I'm copying him. But it's the same thing. And now we get into trade management, and that's a different discussion here. But this trade right now, it needed, I think, about a 20 pip risk. It's up about 8 to 1 right now. Okay, I'm not saying you're going to get that, because everybody, trade management is something that's really, really important to learn. But the main thing is have a plan. If I go down to my 4-hour chart, is there a logical place where we could have said, yeah, take some profit? Sure, there is. I'll just get my little handy dandy drawing tool here again, if I can, right here. This level right here was pretty good because it was resistance, and it finally broke above it and came back. So since we were short from way up here, this would make logical sense. That's about a 4 to 1 reward risk trade right there. 4 to 1 is really, really good. Okay, and can you leave it for longer? Well, sure you can. I mean, this is all hindsight now, obviously, but this is the kind of trade that you might want to leave for a bigger move. Why? Because we're trading in alignment with the bigger trend, with the advanced market flow on the higher time frames. So these are absolutely ideal to get trades like this. Okay, so again, it's all about pure price action reading and understanding the language of the market. Once you understand this, you can apply to any trading style you want, from scalping on up to position trading. Darko, listen, Darko shows these setups all the time. He does pre-market analysis videos several times a week and posts them for the members. And this is exactly what he shows. And Darko only trades longer term, so swing trading and position trading. And my opinion and recommendation, learn this on higher time frames first. I say that because short-term trading presents other challenges, and it's a lot easier to learn on the higher time frames, and then you can easily apply it when you get a really good, solid, foundational understanding of how to do this. You can apply to any time frame you want. As I alluded to in the video, the best skill that you can learn is pure price action reading. Learning to read the language of the market. What is it telling us? And notice that when you saw the video example, there are no technical indicators needed at all, just price. So it keeps things very uncluttered and simple. If you want a recommendation, it would be to learn all of this on higher time frame trading first, like position trading and swing trading, which is all that Darko does, because it's much easier and more slowed down. Okay, plus you don't have to worry about missing a trade because there's lots of time to get in, like usually days or even weeks. With scalping, and listen, scalping can be very lucrative, but you do obviously need to be there when the trade sets up, and that may not always be possible. I'll leave it at that. Again, please hit the like button, subscribe to our channel, and I wish you all a great weekend. Take care.